Hello, I'm Lyndon Wood, and I've been requested to make this investing video because over the years I've naturally invested. At the age of 19, I set up my core business, which was insurance. I've employed over, I think, 4,000 people over the 31 years now, and built a business organically. So I didn't raise any capital to build it. Maybe had I done that, I could have been the size we are maybe 10 years ago, 20 years ago, who knows? But I'm thankful I didn't, especially given the market crash in 2008, 2009. So the sort of net asset built in my life is just over a little of £20 million. And I don't say that for the ego, it's just to give the validation. To make it clear, this is not any financial advice, so this is my full disclosure. I'm purely informing you or letting you know what I do as an individual and sharing what I've become to understand. I don't do anything for ego. This video is not for money. I don't place adverts on any of my videos. YouTube might do it, I don't know, but I certainly don't push that button to place adverts because I'm not interested in earning money. I'm interested in sharing my knowledge with everybody and know-how. So please do subscribe if you'd like to be notified of any further videos. It just makes it worthwhile for me to invest the time and do them for you. Thank you very much. So let's get into this now. So, I will share towards the end of the video, just makes you watch the video, not that you need to, something interesting about banks and your money, which you may or may not be aware of. So there are two types of people that invest, and a lot of people get confused with it. So there's someone who invests long-term, medium long-term, which is what I personally like to do. That's someone who puts money into something and waits 2, 3, 5, maybe even 10 years. So Warren Buffett, the world's greatest investor, will invest for more 10 years or more because he feels that over a long period of time, you can ride the waves up and down, the sort of bull and the bear market, but ultimately you will gain. Wealth and cash are two very different things. So people get lost in the sort of the dialogue with what they mean. So wealth is building what we call capital value, which will mean that you have items or products or assets like buildings that will ultimately be sat there, will go up in value over time, and this sort of investments, but your wealth creation. That does include cash as well. That's a degree of wealth. So I personally have a property portfolio. I have business. I have some collectible paintings, actually one car is collectible, the others just lose money. A degree of cash, I have gold and silver, and of course I have cryptocurrency. So I've got a good spread. It's really important to have that spread. Whereas cash, it's just cash. And a lot of people fall victim to believing that, oh, I've got 10, 20, 30, 50 or £100,000 cash in the bank, I'm okay. Reality is your cash is going backwards every year. And it goes backwards simply because of inflation versus the interest you're getting in the bank. So inflation is, of course, the price of everything you buy going up from your everyday commodities such as bread, milk, meat, and so on. That'll go up 1, 2, sometimes 3% a year, whereas the cash in your bank will be accumulating an interest of 0.1 or 2%. And therefore, each year you're going backwards. So it's good to have a degree of cash in the bank. And some people say to keep something like 3 months worth of your bills or overheads in the bank. Others will say keep 6. But it's always good to have a buffer or something that you can liquidate quite easily and get your money out. So there's the difference between wealth and cash. Wealth is more long-term, whereas cash is more in the bank. The other thing is making sure that when you do invest, you look at it holistically and think, well, do I pay my mortgage off that is charging me a 2% interest? Or do I put that money into an investment it may be a secure investment that yields you a 5%, 6, 7%, 10% equivalent of interest, or an investment that you feel very strongly about that will grow 10, 20, 30% over 2, 3, 4, or 5 years. Me personally, I like to invest rather than paying down that kind of debt. Sometimes you can do a mix of both. And I do that too. So, it's down to personal preference, really. The emotional driver to paying off your mortgages or paying off your debt is, of course, security, and you feel more secure. So if you have that capital available, then do that, or do a mix. The choice is really yours. I'm going to do some screen sharing now because I want to explain a little bit how cryptocurrencies work. And I'm fairly new to cryptocurrency. I dabbled in it a few years ago, but certainly through this last 12 months, I've really looked into various investments quite deeply and learned a lot, got stung a lot. And of course, you can get conned and ripped off as well. And the cryptocurrency market is sort of rife for it. So you have to be very, very mindful and very careful as well. I was going to share the screen so that I can explain. Let's get rid of that a minute. Let me just bring this up. Here goes. Let's share the screen. There we go. So with cryptocurrency, what you have are exchanges. So this is one exchange that people use. It's not the one I use, but it's one that people do use, and it's called Kraken. Now, what you do when you buy cryptocurrency, you open up an exchange, so Kraken or Binance, and I'll just show you Binance in a minute. These are places where you put your money into, and then you exchange your money for a cryptocurrency. And that might be Bitcoin, it might be Ethereum or XRP, or there's a gazillion others, but you have to be very, very mindful. Now, exchanges can be hacked and your money can be taken. Again, you have to be very careful. So you tend to use what I call it's a hard wallet, and that's a bit like a secure USB stick where you transfer your wallet to. It's actually quite fiddly and so on, but plenty of YouTube videos around that will explain that to you. Now, Kraken has advantages. You can put in £100,000 a day, has to be done via bank transfer. That's the only downside. It's a bit of a pain because you can't use your debit card. So when you want to do something quick or invest quickly, it's not straightforward. Binance, on the other hand, you can invest £100 a day, £5,000 a day, or apply for higher limits. And you can use your debit card, so it's a bit quicker. So I quite like, using that one. Both you have to go through ID setup, same as anything financial. You have to do your ID setup, and that can take a few days, sometimes a week, especially if you're applying for higher limits and so on. It's your passport, your driver license, the typical sort of things that you'd be familiar with, but it's well worth doing. Then I use Interactive Investor, which is for equities. You can also do UK ETFs, or if you're in America, American ETFs. These are just funds that are managed by other people. Sort of makes life a little bit easier as well. So this is where I buy my Tesla stock and NEO stock and Amazon and Apple and so on. The good thing about Interactive Investor that I like is that I can set alerts. So you can trigger alerts that when a price drops to a certain level or goes up to a certain level, you can get a text message and therefore you can buy or sell, etc. You can also trigger automatic buys. You set limits and that goes for any sort of exchange. The same with the cryptocurrency. You can say when it drops to a certain level, buy X amount at X amount, or when it reaches a certain level, can you sell X amount at X amount? They're always good little features. This is quite a popular one, Trading 212. I've seen many people sign into this. I think it's a quicker setup over Interactive Investor. I personally don't use this one. No reason why, just preference really. And that's what it is. Let me go back to meeting. Oh, stop the screen sharing. There we go. Still getting used to this, doing the old Zoom stuff. So they're the sort of areas. Now, when it comes to gold and silver, you can buy gold and silver from the Royal Mint and other places as well. Just be mindful that where you're buying from, it's secure. So I think this bullion by post is quite a good one that many people tend to use, or the Royal Mint. They will also vault them for you, which means they will keep the gold and silver for you. That makes it easier and much quicker when you want to sell. That's what I do. I vault it. And it's all based on the gold or silver or other precious metals spot price. So that is a price. You can Google spot price to come up with the gold value per ounce and so on, and the same for silver. But be mindful that when you buy silver, it's plus VAT in the UK. And the people you're buying it from, like the Royal Mint or Bullions by Post, will take their margin. So it's usually 6%. You can negotiate, so you might get that at 4%, 3.9, that kind of thing. And the same when it comes to sell. So when you buy your gold at, say, £1,000 an ounce, and you come to sell, they'll tend to take, 4, 5, 6% off that. So that's their margin, which is fair enough. And then, of course, you get the rest. That's sort of gold and silver. The one thing that I keep getting asked is, I've got no money, how do I invest any money if I have X amount coming in, but it goes out in bills and so on. My advice is, and I'm a big advocate of this, is a feeder business, and that is doing some buying and selling. There may be brick and brack around. You can sell on eBay or so on, or you buy from Alibaba, sell on eBay, sell on Amazon, but anything to accumulate cash. So when you get the cash, you then use that to feed into other investments. So you actually become an investor. I personally like to do things that might get, £1,000, £2,000, £300, doesn't matter. And you can put that into gold, silver, or the equity markets, or even cryptocurrency. And as it grows, you can day trade for a little bit to build up a pot, and then you go into more longer term investments. So that's what I tend to do. I've built up wealth. I continue building wealth. I enjoy building wealth. It's actually quite fun. And as you can see, I play the bull markets, and the bear market is a buying opportunity. Do not panic sell. When we hit bear markets, I never panic sell. I actually view it as a positive. I see it as a correction and certainly a buying opportunity, because when you watch stocks and shares in your watch list on those applications I showed you, you can actually get a good feel for when something is going to go up, and the lowest it goes, and then up again. I tend to use a bit of chart reading. I'm not an expert by any means, but I understood the basics of it. And again, plenty of YouTube videos to watch and learn. It takes you about 30 minutes, 15 minutes, 30 minutes, and you get the hang of it. And I use tradingview.com, and that gives me the sort of charts. And you see those green and red, what they call candles, and all the trends and patterns and the rest of it. It works really well. So the banking. I'm going to share the screen again with you and give you this sort of little warning about banking. I mean, given the current climate, you can see, let's go here. The current climate, you can actually see that banks, like happened in Cyprus back in the good old crash of 2008, 2009, where they grabbed the customers' money, by here. So I'll read this out to you. Bail-in involves shareholders of a failing institution being divested of their shares, and creditors of the institution having their claims cancelled or reduced to the extent necessary to restore the institution to financial viability. What this means is, and not many people understand this, is that when you bank your money in a bank, you are a creditor. So they owe you that money back because you're getting a 0.123 interest. You're actually a creditor. So when a bank struggles or is on the verge of going bust, they can grab your money. And that becomes quite worrying, because it means leaving your total cash in the bank rather than having it invested. When the banks hit trouble times, again, like they did in 2008, so it does happen and can happen. And in the current climate, who knows what's going to happen over the next 2, 3, 4, 5, 10 years. You could lose a good proportion of your cash, because the last thing you want is to be a shareholder in a bankrupt bank. So this is what you call bail-in powers implementation. And this is on the, as you can see, the government website. And it's worth you researching that and just looking at that. But it's is certainly something which I really don't do. I don't like keeping cash around. I'm not a particularly good cash saver. I love to invest, and I do a little bit of day trading. So hope you've enjoyed this video. I do hope you subscribe, and I will make the next video will be based on why we use social media. Please do subscribe, and I'll talk to you again. Thank you very much.